Hey guys, Spenny here. So in today's video, we are going to listen to Peter Lynch. He is one of the greatest investors of all time, and I'm going to play a clip from back in 2002 where he explains when to sell a stock. And then after the clip, we are going to discuss how his advice relates to Palantir so we can formulate a plan exactly when to sell this stock. But before we do get into this video, make sure to drop it a big thumbs up if you find it valuable, and feel free to subscribe if you want to see more content. Now before I do play this clip, guys, I really urge you to go read Peter Lynch's books. One Up on Wall Street is an absolute classic. I have read definitely well over a dozen investment books, and I gotta say, that is a book I keep on going back to refresh my memory on. You will learn so much from it, and you absolutely will make more money in the stock market. But it really is true. If you read books from Peter Lynch, Warren Buffett, great investors like that, you will make more money in the stock market and you'll feel so much more confident investing. You'll have way more conviction to really go deep into your high conviction stocks. Anyways, that's my little rant around reading investment books. Highly recommend it, especially if you're new to the stock market. But anyways, let's get straight into this clip.
When you were actively managing money, you presumably were under the same pressures as other fund managers to show performance results. Right. Did that incline you to sell too quickly sometimes?
Well, I think my greatest mistakes are, it's funny, in a stock, all you can lose is 100%. I've done that. But your great mistakes is selling a good company, and then it doubles, then it triples, and it quadruples, because you make a lot of mistakes, and so those ones that go up tenfold, I call them the 10 baggers. So some of my mistakes are just saying, oh my God, this stock is too high, and I was wrong. And you had to figure out, what inning am I in this baseball game? I sold Toys R Us way too early. It went up 20-fold after I sold. I did the same thing at Home Depot. Those are probably my two greatest mistakes I ever made.
When should you sell?
Well, you ought to find out why you bought a stock. If you're saying if it's a cyclical company and they're doing poorly, and they're doing awful, you wait till things are getting better, and they're doing terrific, and then you sell it. But with a growth company, you have to say, Walmart's case, 10 years after they went public, you could have bought the stock and made 500 times your money. Because they still are only in 15% of the United States. And they could say, why can't they go to 17? Why can't they go to 19? Why can't they go to 23? So for the next 4 decades, they went around the country. So you have to say to yourself, in this stock, I have a 10-year story, a 20-year story. You ought to be able to write that down and follow that. That's what I do with the company. And that's your decision. That's how you sell it.
We have a novel element for many investors today in the trust issue.
Yes.
We also have security problems that we didn't traditionally have in America. Have they changed the way you pick and believe in stocks?
No, you still buy a company, and you buy a company to grow. And if it's a textile company or it's an electronics company or a software company, you better understand what they do. And if they do well, the stock will do well, no matter what happens to the market. If the Dow Jones today was 1,000 or 500, you would have made a lot of money in McDonald's. You would have made a lot of money in Johnson & Johnson. You would have made a lot of money in Gillette. These companies' earnings have gone up a lot the last 30 years. And if the market was 50,000, you would have lost money in Burlington Industries. I recommended that in 1969. I think it's gone from 34 to 2 with no stock splits because their earnings have been terrible.
Well, your modesty actually makes an important point, which is people with the best batting averages in the world don't bat 1,000. Yeah. I sometimes get angry mail, particularly during bear markets, saying so-and-so recommended such and such and it went down. Yeah. Well, how often did you come up with a clinker?
Well, this is a funny business. You don't have to be right even 5 times out of 10. If the times you're right, you make a double and triple. It offsets all those times you lose 20 or 30%. So when you buy a stock, you ought to say to yourself, how much can I lose and how much can I make? And you ought to be able to make a lot. Because stocks are risky. I mean, look at how much we lost in AT&T. Look how much we lost in Xerox. These were quality companies. You know, you can lose a lot in a stock. So you ought to say to yourself, how much can I make? Because I want to buy a stock, if I'm right, I'm going to make a double or triple.
Does your own confidence ever get shaken?
Every day I think the market's going to go up. You know? I keep calling a lot in my company, so I keep calling the company.
Okay guys, so first thing we can rule out, Palantir is not a cyclical stock. You don't need to sell it during poor economic conditions such as automakers. You know, automakers like Ford, GM, when there's a big recession and people don't have as much money, those stocks will drop massively. Palantir is in the data business. It's going to boom regardless, and we've seen that over this past year. Some examples Peter Lynch gave there was Toys R Us and Home Depot. They still had massive room to expand back in the day when this was filmed in 2002. Thus, their earnings had plenty of room to grow, which would result in share appreciation. When a company increases its earnings over time, that is really the fundamental reason why a stock should appreciate. And the example he gives on Walmart is when Walmart was actually a high growth stock. So ask yourself now, do you think Palantir is going to expand its business, become more valuable, grow its earnings? And really, how far along are we in the story of Palantir? In my opinion, the story is just starting. The company was founded in 2003, and in my opinion, we are now just entering that software revolution where Palantir will really shine. Now, I see quite a few comments, people saying, oh, Palantir is, an 18-year-old company, hasn't really produced earnings, why would they grow now? Let me give you an example of Amazon. Amazon was founded in the early 1990s and really didn't take off until closer to 2010. Took about 20 years for that company to really hit prime time. And in my opinion, Palantir is just hitting prime time now. Think about it, 2003, yes, there was data out there, but data wasn't growing anything close to what it is now, and companies weren't utilizing data back then as they are now. And I've said this before in previous videos, but I really don't think people can comprehend how important software and data is going to be in the future. If you look at the statistics of how fast data is growing, it is in a serious exponential mode right now. So I don't think anybody can say really how valuable the company Palantir is, but I can tell you right now, this isn't the end of their story. It's really just the beginning, in my opinion. So anyways, guys, as far as selling Palantir, I am thinking, 20 to 30 years out. It is a long-term stock here. Don't expect to make massive returns over even the next year. High growth stocks trade on different multiples year to year, so we don't know how the stock market is going to value it in the short term. But if they increase their earnings over the next 10, 20, 30 years, you're going to see massive gains in the stock, and that's really how I'm looking at Palantir right now. Anyways, guys, make sure to comment down below. Give me your opinions around this thesis. I'd love to hear when you guys think is a good time to sell Palantir. A lot of very mixed opinions around this stock, so let's get some conversation going in the comment section. Anyways, hope you guys enjoyed this video. Make sure to subscribe if you want to see more content like this, and I'll see you guys on the next video.